Good day, ladies and gentlemen, and the extended Citadel family. We hope that you're healthy and comfortably ensconced with your family in your place of safety. As you know, Citadel went virtual more than 2 weeks ago already, but every single employee is online and active, and it's business as usual for us. Unfortunately, it is not a world as usual at this point in time, and hence the purpose of this first communication via this medium with you, which we'll be doing weekly from here on. But it's also why today I'm joined by Richard Calland and Lawson Naidoo from Paternoster Group, because these are such interesting times and we need all the intelligence we can get. And with that, Richard, over to you.
Thank you very much, George. I'm going to moderate this discussion over the next 20 minutes or so. On behalf of Lawson and myself, the Paternoster Group, we're very pleased once again to be resuming our very constructive and active partnership with Citadel. These are difficult times, as you say, George, and it's clear now that humanity is facing its greatest crisis for a very long time, possibly ever. Certainly leaders around the world are grappling with a very complex and very profound problem, unprecedented territory for many of them. And it's been described as the greatest threat to humanity since the end of the Second World War. Economically speaking, of course, it's a huge shock. We're going to talk about the economics. George, that's your area. You're going to talk about the economics of this crisis and the market response. And Lawson then is going to deal with some of the politics and the governance. And never have the economics and politics of a situation be so closely intertwined. It's very clear that every single step of every single decision taken by governments in South Africa and everywhere around the world will have huge implications for the economy, for real people's lives, for their futures, and for, of course, for their wealth. So, George, with that introduction, recognizing that these are extremely turbulent and difficult days, please help us by sharing your thoughts on the economics and the market conditions that are prevailing at the moment. Over to you, George.
Thank you very much, Richard. Indeed, the world is at a very peculiar place, and a lot of decisions are driven by external factors and, as you say, by politicians. So let's dive straight into this, we look at the COVID-19 cases. And we know that these have grown exponentially, but one of the concerns for the financial markets right now is that we've only seen the curves flattening off in Asia. We have not seen a Western country flatten its curve yet, and hence a lot of concern around that. When we look at deaths, yes, the situation in Italy is dire and very sad, but what is of concern to the financial markets is what is happening in the US. The US seems to be way behind the curve in their actions that they are taking, and hence the concern for the markets. This is the rolling 7-day average of new cases per day, and there you can just see how the cases in the US have absolutely exploded, and that is now the epicenter of the concern for the world. The models suggest that the peak for the US only comes in the second week, maybe the third week of April, and those numbers are absolutely scary. Anything between 1,500 and 2,000 people per day dying at the peak of this problem, and I'll come back to that in a moment. Now, the problem is, you might say, what's this all got to do with the financial markets? Well, when the roof of a building is on fire and firemen come in and they douse that fire with water, they will tell you through experience that it's the water that ruins the rest of the building and not the fire. And this is exactly what's happening to the world right now, and that is that the response to societal confinement that's put in place by politicians is absolutely causing havoc in the economy as we get a sudden stop scenario where all demand just ceases and all consumption is cut off. And this is the crux of the problem in the world. So look at global growth. There's global growth over the last 40 years. The global financial crisis was a shock to the system and a major drawdown to global growth. But just look at how projections for global growth have been adjusted due to this very unique, as Richard described it, worse than a lifetime experience for the global economy. And that drawdown in this second quarter, as much as 10% drawdown of global GDP. That is truly an historic number. Yes, we will have a bounce back. It'll be unique to see how people react when you open the doors, but we've still got a long way to get before we get there. Market impact, we have to talk about that, and the economic impact. Are we going to have a recession? No debate. We're in a recession already. Now, to give you a sense of the severity of this, that Goldman Sachs reckons that the US GDP for this second quarter draws down by 34%, leading to 2020 GDP contraction for the US of -6%. That is one of the worst numbers ever seen in history. So yes, we've had a lot of volatility in the markets, and the VIX reached an all-time record high of 83. Will we go into a depression though? That is a super important question. Our take is that no, we don't, because this contraction won't be that extended. And remember, this is not a war. Nothing is destroyed. And will we have a market meltdown? For the same reason, we also think no, we don't, because yes, this is a sudden stop, but it's not a sudden destruction of all demand. It just creates some pent-up demand. And the other reason why we don't think the entire market melts down is because of global government and central bank responses. In 2008, 2009, there you can see the fiscal response that was put into the system. And just look at what has been announced up to now, and there will be more. We've now had more fiscal stimulus being placed into the system to support the global economy than we did in 2008, 2009. And we think that central banks now also understand the dynamics better. They reacted quicker. They cut interest rates enormously. And so we think that this secures that the market doesn't go into an absolute tailspin. But that's not all. As if that wasn't enough volatility, the oil heavyweights in the world then start an arm wrestling contest. And the oil price drops 40%. And that scenario placed commodities under pressure, added extra volatility to the system, and probably placed the dollar onto a pedestal of strength where it actually doesn't deserve to be right now. So this also created a lot of uncertainty, but we stripped the oil effect out from understanding the world economy, because you must look for the causality, and in this instance, oil is not the causality, but rather maybe the casualty. This is just to highlight over the last 6 months, that shows you daily returns of the S&P 500 index, and then suddenly what we went through in March. It was truly a market just fibrillating with some of the largest moves ever in history, but to both sides. And our point is that that type of volatility doesn't subside in an instant. And that type of fibrillation is due to continue. So in summary, the political response to what happens to COVID is the most important variable that we are facing, and that will determine the economic outcome. That the pain still lies ahead for the actual economic numbers, for earnings numbers, for debt, and for the consumer. That pain still lies ahead. So are we in recession? Yes. Will we go into depression? No, we won't. And what's happening right now, the market jumped up a good 15-20%, depending which market you look at, and many people shout, this is over, it was just short run. No, it's not. This was just a rebound and a relief rally, and there's definitely a lot of volatility still ahead. In terms of at Citadel, we've always run a multi-layered, multi-asset, global, diversified solution, and that, combined with a long-term outlook to our asset allocation, has placed us in a good spot into all of this volatility, and our solutions held up well during this turbulence. Our strategy today, a lot of people are throwing away fantastic assets at any price that they can find, literally to raise liquidity, and our strategy is to buy jewels that are thrown away amidst this turmoil. And Richard, that is as brief a summary as I can give, but with that, back to you.
Well, George, thank you. That's extraordinary that you were able to condense such a complex and difficult and profound set of variables in such a short period. I was extremely impressed by the fact that you believe that this is 2008, a recession, a global recession, rather than 1929, a global depression. And that's, of course, a very important distinction. Clearly, Lawson, turning to you, the decisions that governments are taking, the decisions that are being taken by heads of state are varying around the world. Trust is a crucial commodity during the early phases of a crisis like this. In President Ramaphosa, we seem to have somebody who is rising to the occasion. So I wonder if I can begin. I'll end by asking you about Ramaphosa, but I've got 3 or 4 questions I just want to pose to you quickly. The first really is, how do you believe that the South African government has responded to this crisis? It's one of the questions that's come in from clients of our partner Citadel. They would like to know, and we're following this closely, of course, how well put together, how thoughtful and how effective a response is the South African government's. Over to you, Lawson.
Well, thank you, Richard, and thank you, George, for setting the scene in the way that you have. I mean, I think it has to be said that the response so far of the South African government has been incredibly impressive. I think they've had the benefit of learning from the experience in Asia, in China, South Korea, and elsewhere, who are a few weeks ahead of us in the spread of this pandemic. So we've been able to learn the lessons that they implemented in terms of trying to flatten the curve. And I think the conduct of the South African government so far has been incredibly good. It has garnered significant support from all quarters in South Africa, who have recognized the leadership that President Ramaphosa has demonstrated at this time. He's addressed the nation on 3 occasions since the 15th of March, each time more impressive than the last, I would say, where he's been calm, he's been measured, he's been confident, oozing confidence in that government has a plan to deal with containing the spread of this virus. And I think that has been incredibly useful. Certainly, not all of his cabinet ministers have demonstrated the same level of leadership and confidence that he has. I think he and the Minister of Health, Zweli Mkhize, have stood out above the rest by quite a long way. They have both grown in the estimation of the South African public, and particularly Health Minister Zweli Mkhize, I think, who's come from obscurity almost to a position of national prominence now, and people feed off almost every word that he utters in public and believe in what he says because he speaks with such authority. Some of the others, unfortunately, in the government have not demonstrated that level of calmness, of leadership, of sobriety. I'm talking specifically of the Minister of Police, Becky Cele, the Minister of Transport, Fikile Mbalula, and the Minister of Social Development, Lindiwe Zulu. We've had crises in the last couple of days with old people collecting social grants that has not been managed very well. So I think there are different levels of responses from within government, but overall, I think the response from government has been very good.
A political crisis like this, Lawson, can make or break political careers. And clearly for Zweli Mkhize, this is an opportunity that he seems to be seizing with both hands to rebuild his political career, which had kind of lost its way at the ANC conference in Nazareth, where he made a complete hash of his campaign to be deputy president.
Indeed, I would agree with that. And I think the other thing to note at the moment is the complete obscurity of the current deputy president, David Mabuza, who's nowhere to be seen in any government profile in terms of dealing with this disaster. Zweli Mkhize has certainly stepped up to the plate. And I think in the longer term, what one will need to watch the political trajectory that his career now follows. We know that, for example, that the ANC's National General Council that was scheduled for the middle of this year is going to be postponed indefinitely for the moment. So that buys the Ramaphosa administration a bit more time. It provides Zweli Mkhize with a bit more time to get his strategy together to shine at that conference when it happens.
So turning to the government strategy now, two questions. Firstly, clearly the lockdown, for it to work, has to be complied with. So compliance is a big issue. Is there a danger that in seeking high level of compliance across society that the government will be heavy-handed? We've seen some quite distressing scenes in terms of police brutality or military brutality. What are your thoughts briefly on that point?
Well, I think that's a critical issue, because obviously trying to enforce a lockdown in a country like South Africa, where there are highly densely populated areas in townships as well as in informal settlements, it's almost impossible to get people to physically isolate. And there have been transgressions, which has received a very heavy-handed response from both the police and the soldiers on the ground. This is something that is untenable, that government needs to stamp down on. And this is where I think the ministers of police and defense have been particularly weak in not being able to enforce that. And it's going to take leadership from the president to be able to do that. Otherwise, we're going to see pockets of blow-ups of resistance to the lockdown from poor communities who are necessarily and understandably desperate, saying, how are we supposed to distance when we don't have money to feed ourselves? We have to go out and try and get resources to put food on the table for our families.
Lastly, Lawson, in terms of the looking ahead, the strategy of the government seems to be one that's based on what I seem to see as 4 T's: trace, test, track, and treat. That's essentially what he announced, I thought, very clearly on Monday night. Can they succeed with that? It's almost as if this is a bigger test in terms of governance and infrastructure and delivery as rolling out the 2010 World Cup, FIFA World Cup. The government succeeded then. Can they succeed now?
Well, I think that's going to be one of the critical factors in terms of whether we are going to be able to flatten the curve in the next few weeks. In that, you know, the numbers in South Africa are still relatively low. There are only 1,353 positive cases. But we've only tested sort of just over 35,000 people so far. So as we expand that testing, those numbers are going to go up, and the ability of the government to treat the positive cases is what's going to have a significant impact on whether we can control the spread of this pandemic. So the president has spoken of a huge rollout of testing in the next few weeks, and that's going to be the determining factor.
Lawson, thank you. So George, back to you. Our view as Paternoster is that Ramaphosa, the president, is stepping up. He's raised his game, and he seems to be the man for the moment, as is his Minister of Health. Can his government continue on this positive track? Can they get society to comply with the lockdown? Can they roll out this testing and tracking program? That remains to be seen, and there will be still big tests along the way for the leadership and for the government. But so far, so good. George, turning back to you and a couple of the questions that have come from your clients, I want to put those to you. Firstly, given the current uncertainty, to what extent is our own banking system at risk?
That's an important question, Richard. We've had a lot of debate around that. Firstly, the globe's banking system learned a lot of lessons from the 2007-2008 credit crunch. All forms of regulations were strengthened, reserve requirements were increased for all banks, and our South African banks have become very conservative in their provisioning for bad debts. And so we've seen that central banks throughout the world have reacted very quickly, lowering interest rates. In fact, our own central bank has instituted the repo facilities, putting a lot of liquidity into the banking system. They've lowered the reserve requirements for banks, which releases a ton of liquidity into the entire banking system. So overall, the global banking system is in decent space, and the South African banking sector, despite its valuations being halved literally in the next month, in the last month rather, is actually in perfect footing, and there's no concern about South African banks systemically whatsoever.
Good, thank you for your clarity on that. The second question is, in the light of the Moody's ratings downgrade last Friday night, what's your view on South African equities?
Okay, so the downgrade is typically a fixed income story that has to flow through the currency because a lot of foreign investors might have to sell their South African holdings and go out. So it's a currency play firstly, and the currency has a dual effect on equities. It's good for some and bad for others. So it depends how the currency pans out over the next month or so. We have a specific view about that, which we've communicated very, very often. Secondly, it's about the cost of capital and overall the discount rate that is applied to equities in terms of cost of capital. Obviously, this now punishes companies with more debt and poorer balance sheets, and it awards those with conservative balance sheets. So that's a good thing, a quality factor. And then finally, the issue of the discount rate means that it places a higher discount rate on all equity valuations for South African companies for the medium-term future. And so that is a little bit of a headwind to South African equities.
Thank you, George. Finally, back to you, Lawson, with a final question that's come from Citadel clients. And that is a question that I think is on everybody's mind, both in South Africa and around the world, which is the question of how long will the lockdown last? I appreciate that it's a difficult question. There's no way you can know. We're all speculating about that. And in a way, it's the real tight convergence point between the politics and governance on the one hand and the economics on the other. The lockdown, which we have in South Africa, has brought the economy to a shuddering halt. When will it be lifted? When can the economy get going again? We've seen how Donald Trump has started to hint, but now has retreated from saying, well, he wants to reopen the economy as quickly as possible. It's a very delicate question. Go too early and you may get a second wave of infections. Go too late, you may, of course, deepen the economic recession. So Lawson, any gut feel about whether the 21 days will be sufficient or not?
Well, I think the starting point has got to be the government's emphasis so far, and particularly from President Ramaphosa, is that the health crisis is the primary issue that he is dealing with, and that whilst he recognizes the importance of the economic crisis that we're in as a result of the downgrade as well, that the primary focus is going to be fixing the health crisis. So if that requires an extension to the lockdown period, I think it's a decision that government will take. I don't think they'll be afraid to take that decision. We may well see an extension for a couple of weeks at least, particularly given where we are in terms of the timing of the spread of the virus. We may need a lockdown for a little bit longer in order to ensure that that curve does indeed get flattened, so that we can start then focusing on economic restructuring and rebuilding.
Well, thank you both very much for the clarity and decisiveness of your views. I know that everybody is looking for certainty and clarity at this very difficult and turbulent time. But I appreciate your attempt to provide that view of the future in those difficult times. We're out of time ourselves, so let me hand back to you, George, to wrap this broadcast up. Thank you very much.
And to you, Richard and Lawson, thank you very much for joining us. As always, your input is absolutely vital. We agree with you that the South African government's response has been fast, sharp, clear, and that the leadership of Mr. Ramaphosa has been strengthened during this whole process. And hopefully this is the beginning of some good things to happen from here. So ladies and gentlemen, thank you very much for joining us today. Next week, Nishlin will dive into equities and spend some time specifically around any of that. But until that time, we can just say to you, stay safe, stay healthy, stay at home. Thank you very much. Bye.